Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon and good weekend, everyone. Ira Epstein of Linn & Associates with your financial market update. And this is for Friday, the 24th of February, 2017. So I want to talk to you a minute here. One of the things that I pride myself on, and I know a lot of you watch us and, our viewership keeps going up rather dramatically. I keep telling you that the morning updates are not something you get. A lot of people have told me, well, Ira, why subscribe? I see your stuff. It is so different when I say buy here, sell there, do this, than what you're seeing here, because the government says I have to be generic. I can talk charts, but I can't say you buy here, you should sell here, you should put a stop there. I have to do it a whole different way. In the morning, having coffee, simple 10 minutes with me, I think I'll open your eyes up to trade ideas, and I'll talk about that in a minute with a bonus thrown in. Let's go right to the charts. Another up day in the Dow. You're going to read in the paper 11 days in a row. I was up on Fox today saying, I think the market's getting rich, and it wouldn't surprise me if we get a setback. That is not the end of the bull market. It's just getting to a point where rotations are taking place. The Russell was one of the weaker indices today, but the Dow up. And look at how this market is going on a monthly chart. I mean, you just keep running. For this month, you're up nearly 1,000 points. I mean, that's big. You're finishing this month up. You got a couple of days left next week on a very strong note. When we go to the weekly charts, you've got the clear pattern of higher lows, higher highs, bullish unless you take out 19,713 on the current chart pattern. The market is trading well over the 18-week moving average of closes and the 100-week. Now, the interesting thing is this 18 weeks is going to get a jump in its numbers when it reopens Sunday night. I don't think it's going to be quite to that number, 19,712, but we'll see. When you look at Bollinger Bands, you haven't hit an upper Bollinger Band since the beginning of, into the first part of December, maybe the first half of it. Since then, you slipped back. I'm not saying you can't go up to it. And the next zone is the 21,100 level, let's call it, 21.1. Pretty important level, but it can easily happen if the market wants to keep going. And the slow stochastic studies, well, they're locked in to bullish momentum. That's the important thing. Now, I never put the same emphasis on weekly stochastics that I do on daily or even shorter term. But I watch them, and there's something that I keep my eye on. When you go to the slow stochastics on the S&P, built in like that, same pattern, higher lows, higher highs, same phenomena. You haven't gotten up to the upper Bollinger Band since mid-December. I think you can see that. So the market, while it's staying up, not getting quite up to that number. The NASDAQ's different. The NASDAQ has been riding the upper Bollinger Band all the way through, and just like textbook case, it gets over it for a brief period and pulls right back to the right-hand side, just the way that it finished off this week, and that's still very bullish. Notice it's not even giving you much of a chance to come in on breaks. The market that's given you a reversal, believe it or not, is the Russell. You have an outside week down. Now, the way to put that to bed is for the market to reverse course, take out 1410.60, because on an outside week down, if a market takes out the high of that week, the week after, or the week after that, you got 2 weeks to do it, the market is said to have created a bear trap. Bear because these people are betting the market's going to come down. You still have the embedded reading, but this has now shown itself to be the weakest of those indices. When we get to the VIX, you want to get chopped apart. I want you to look at the Bollinger Bands. It's almost like you sell the upper band, buy it back at the 18-day average, buy the lower band, sell it out at the 18-day average. That's just how it's acting. And momentum is not giving you much of anything. It's just drifting here in the 50 level, if you will. Not able to tell you very much. Now, if it turns down, well, that could mean that we get back through everything. You'd have to get under 10 to really get traders' headlines going that, oh my gosh, the VIX is really coming down, and that's going to accompany a big stock market rally. At least that's the theory, because insurance. When we look at the 10-year notes, you went right back to the 18-week moving average of closes, the 125.10 level, closed over that today. So the market's in an uptrend, higher lows, higher highs. That's in the face of the Fed saying they're going to raise interest rates. If this goes up, it means real rates are going down. Just keep that in the back of your mind. But you're at that zone now, that 18-week average, where often markets have problems. You've got the same problem in the dollar index. The market has pulled back to the 18-week average. To get this market bullish in the dollar index, I think it's got to take out 101.70. If it can do that, you could end up with the pattern of higher lows and higher highs. Right now, you've got a lower low and a higher high, and you're stuck at the 18-week moving average. Pretty neutral market. In the euro currency, you've had a rally off the swing line turning bullish. It ran into a brick wall at that line in the sand, that 18-week average, just sort of stuck there as stochastics have climbed out of being oversold. This market's looking for direction. It doesn't have it yet. In the British pound, look at the 18-week average. You've been stuck here for 5 weeks in a row with an ever-narrowing Bollinger Band. So when you look at weekly charts, it's so different than the daily because you take some of the noise out if you're looking for the longer-term trends. Obviously, it's very hard to trade on these because your risk-rewards are so different. The Canadian dollar, lower highs, lower lows. So the swing line's down. That's cut back because you're over the 18-week average. And where's the battleground? The 100-week average in green. You're also overbought as can be. Japanese yen, battleground, 18-week moving average of closes. Trend, well, it's, if anything, it had been in a downtrend, but with the close today over the 18-week average, that gets nullified. Momentum picking up. Looks to me like the market's had a successful test of the 100-week average, and if it can get over 89.71, could be ready to embark on higher prices. We then get to crude oil, just drifting sideways in a narrow Bollinger Band, but the momentum has stayed up. And if you believe that price leads momentum, then you have to believe that you still got a bit of a bias to the upside, but you're not trending. You got a lower low and a higher high. I don't know what to do with that. Natural gas, well, it's finally broken down to the 100-day average of closes where it's caught a bid that between there and the lower Bollinger Band. It is oversold. That doesn't mean it can't go lower, but you came down into a support zone on that chart. Another thing to remember, and this is really important, a lot of these nearby, when you're dealing with weekly charts, they're made up of the closest contract. A lot of March contracts are now going off the board. So when that occurs, you move to the next contract, and that changes sometimes the look of the chart the week after. Just keep that in the back of your mind. It's something to remember. Let me take you now, if I could, to my market research, because this is important. You know, I sell this research. I give a free trial, and you're always entitled to a free trial if you haven't tried it before, but we keep a real clean list and we know what it is. Today what I did is, if you were on our mailing list, I sent you out my morning video. That's the subscriber video that none of you see here unless you're a subscriber, where it's specific. Buy here, sell there, here's my thought, here's what I think the pros are doing, here's why the market should move up, come down. In addition, my written commentaries today. Why? Because I'm offering you $20 off, which is a third off of a standard subscription, which is $60 a month for $40. If you have a trading account with us, your $40 subscription will go to $20. And no, this doesn't pertain to current subscribers, okay? I've got something else for them. But if you haven't if you're not currently a subscriber, this is a great way to come in. And if you were a subscriber, a great way to come back. Why? You're going to see the written updates. You're going to see the videos that come in and explain why the trades are happening. And I cover a lot of markets that I'm not trading. I cover 40 charts every morning practically for you. So you get an awful lot. The 20-day access if you want to try a free trial. Otherwise, you'll get the morning videos, the subscriptions, even oral updates by phone. Call us. Go to our website. Click up here, and here's the code for you. It's IRA, capital I, capital R, capital A, 20, all one word together. So when you're purchasing, it'll say, do you have a coupon code? Put it in there. You will get your benefit. I'm Ira Epstein. Hope you like these weekly updates. I will see you all come Monday.